Phew! Today was hard to watch, man. Today was hard to watch. Like bloody day for me. I lost a ton of money. I have lots of oil and gas stocks on my portfolio because I'm betting on oil to be one of the biggest gainers of this US recovery post-COVID. So at a point at opening, my oil stocks were up, but everything else was red. And then after 30 minutes, everything was down. It doesn't matter. Airlines, technology. I don't even want to talk about technology. Apple, Palantir, Tesla. Doesn't matter. Everything was down. 10%, 8%, 12%, 13%. The only thing I was hoping Bitcoin not to drop, but even that dropped. So today was really hard to watch. So actually, why in the hell market crash today? Actually, one single reason, and we're going to talk about it in this video. Bonds. So what are bonds? Bonds is basically the US government or the Fed, the US central bank telling you, hey, I'm issuing a debt, and if you invest in my debt, basically buying my paper for 1,000, I will give you $20 each month. And they are safer because they are backed by the US government, meaning the US government cannot fail because they collect taxes, because they collect, a ton of money each month, and basically they can go bankrupt. So you can be guaranteed that they will continue to pay the money, the coupon, so the interest, and they'll continue to pay your money back. So basically, stocks had a huge bull run today. Not today, since the couple of months, since December, stocks have been continuously hitting all-time highs. Now, whenever stocks are up, bonds will trade down because it doesn't, there is so much money to be made on the stock market that it doesn't make any sense for investors to put the money into bond, even though they are considered safer because the 1.5% or the 1% that will give you can have 5% in the stock market, you can have 10% in the stock market, you can even have 20, 30, 1%, in high growth stocks, penny stocks, and stuff like, the YOLO stocks. So why in the hell will you put your money in bonds? But today, those yields, those interest rates went up, and they went way up than the last 10 years for the 5 years and the 10 years treasury. So basically, whenever we hit 1.5% yield treasury for the 10 years bond, man, stocks tend to sell off. And then whenever we hit 1.75% for the 5 years treasury bonds, stocks tend to sell off. So today, it doesn't matter which sector you were holding stocks. The fact that those bond yields went up, everything crashed. So why in the hell the fact that bond yields are raising is bad for stocks? Actually, if stock investors are sitting on high growth value stocks like tech, Apple, Tesla, Netflix, and Zoom, last year went up, at least 300%. So all of these investors holding those stocks, now they're saying, hey, the fact that the US government and the Fed, are raising the bonds, are raising the yields, and it's considered safer, and we have inflation coming, why would I continue to hold stocks if I can park my money somewhere where it's safer or guaranteed with 1.5%? Makes sense, right? So people are now selling what they consider to be overvalued, overpriced, on those stocks, and then they are putting money into bonds. But the thing is, no one is actually buying bonds. So it's kind of intricate with, it's a mess. It's a mess. But looking at this, I don't want this to be something that, you consider to be the situation where we'll dwell in, because whenever markets, especially the stock market, is down, it is shopping time. Why is shopping time? Because stocks like Apple, the techs, NEO, CCIV, if you look at the charts, they are trading at discount now. So you can buy now because you consider these long term, you consider these even medium term, like you can hold it for 6 months, you can hold it for, a couple of at least a year or throughout the end of the year, you will definitely be rewarded. So that is actually the reason why we have the market crashing today. And some analysts are saying, and there is a little bit of truth behind it, the fact that GameStop doubled today, actually doubled from yesterday and closed in the green around 20%. Whenever GameStop, is rising, all of those hedge funds involved into GameStop or AMC at shorts, they have to sell growth and long-term stocks like Apple, Microsoft, Netflix. They have to sell those in order to make some money to diminish or to decrease the leverage they have in those high shorted stocks. So that's also maybe one of the reason behind the reason why market are crashing today. But again, look at what happened on Monday and look at what happened on Tuesday. So we did crashed yesterday on Monday, but it was kind of a V-shaped recovery thing. Like we dipped and then we went down at a point during intraday session, and then before closing we were either flat or a little above the green session. But today was kind of different. And personally, I think with the fact that we had a huge bull run market on the latest weeks, the latest months, with stimulus checks coming, with recovery coming, with Johnson & Johnson as the new vaccine being close to being authorized in the US, with the fact that they can potentially vaccinate 20 million Americans by late March, which meaning in a few weeks, those are catalysts, so the market will continue maybe to sell off, but at a point, we'll wake up one day and just like that, we'll see those 3% up, 2% up, 5% up, and everybody will smile again, So I'm still buying through. I bought some NEO today. I bought some American Airlines. I increased my positions in Carnival Cruise Lines. And I bought what else? I think those are the three that I bought. So I don't have a ton of money to invest in the market, but depending on how oil, which I'm heavily invested, trades tomorrow, I will see if I have another additional money to spread into the market if we sell off again. Otherwise, I do see that we recover from this, in a couple of weeks, but you never know. This is just my opinion, but it doesn't mean it will necessarily do that. So be just ready. Sometimes we're green, sometimes we're red, sometimes we have those 10%, 12% sell off like today, and sometimes we'll have 20, 15, 13, 10%. So that's the way the bull market rides or the stock market rides. So that's it, guys. Thank you for watching. I will see you in the next one. Until then, take care.